Ladies and gentlemen, good day and welcome to the Data Patterns India Limited Q1 FY23 earnings conference call hosted by Go India Advisors. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Monali Jain from Go India Advisors. Thank you, and over to you, ma'am.
Thank you, Faizan. Good afternoon, everyone, and welcome to Data Patterns India Limited earnings call to discuss the Q1 FY23 results. We have on the call Mr. S. Rangarajan, Chairman and Managing Director, Ms. Rekha Murthy Rangarajan, Full-Time Director, and Mr. Venkat Subramanian, Chief Financial Officer. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risks that company faces. May I now request Mr. Rangarajan to take us through the company's business outlook and financial highlights, subsequent to which we will open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Monali. Good afternoon, ladies and gentlemen, and thank you for joining us today for our Q1 FY23 earnings conference call. I hope you would have seen the results presentation, which has been uploaded on the exchanges and on our website. While Venkat will take you through the results, I want to briefly touch upon the key highlights for this quarter. Despite Q1 being a seasonally weak quarter, we have delivered a strong revenue growth. Our revenues have almost doubled on a year-on-year basis, and our profitability has increased 1.4 times. When you look at the quarter one results closely, you will see that the gross margins have been maintained around 64 to 65%. There's a dip in EBITDA margins on account of seasonality of the business. Another key thing to notice is the development contracts and the production contracts have contributed equally to the revenue this quarter. This is an important highlight because development contracts provide a good visibility for our future revenues. Our order book position is strong and continues to grow. As on date, our order book stands at 664 crores. We have close to 340 crores of order where negotiations have been completed. Out of these, we also received a letter of intent for orders worth 174 crores. Once the contracts where negotiations are completed are converted to orders, our order book will cross rupees 1,000 crores, which will be the highest in the history of Data Patterns. During Q1, we had an order inflow of 456 million rupees of production contracts. Some of the key contracts received were: 1. Avionics contract for 183 million from HAL, avionics contract from DRDO for 104 million, a large order for electronic warfare from DRDO worth 18 million. The other category has been ATE and naval systems, where we received orders worth 7 million and 10 million respectively. We are a long-term debt-free company and have utilized the proceeds from the IPO to pay off the debt and also expand our manufacturing facilities in Chennai. The new facility is required to handle full system contracts and also to augment the production and testing infrastructure to ease our operations. The system integration facility is already being used and the remaining portion will be completed in the next 2 to 3 months. Data Patterns is now well recognized for its R&D, engineering and execution capabilities. Every part that we manufacture is designed within our country, within our company, resulting in an integrated operation that maximizes value addition. We are focused on building complete systems which immediately graduates us into an exclusive league of companies who are not merely component manufacturers but provide complete solutions. There are many macro factors supporting a strong growth outlook for us. We believe we are strategically positioned to benefit from this growth opportunity and are confident of delivering our shared guidance of 25 to 30% revenue growth in the FY23 and maintaining high gross margins. With this, I will hand over to Venkat for his comments. Venkat.
Thank you, sir. Good afternoon, ladies and gentlemen. We are happy to inform you that we have delivered a strong quarter. I would like to take you all through the financial performance of the company for the quarter and gone by. Our revenues in Q1 almost doubled year on year to 68 crore, of which development contract contributed to 45% and production contributed to 46% of the revenue. Gross margin for the quarter maintained at 65% sequentially, and EBITDA margins at 31% in Q1. Our interest expenses are minimal at 2 crore, having fully paid our debts. PAT during the quarter stood at 14 crore at a growth of 38% year-on-year, and EPS at 2.70 rupees. We have spent around 45 crore till now for the new facility, and the cash in the books as of end of quarter 1 stands at 116 crore. Overall, this quarter's performance is strong, generating record revenues in Q1. Q4 is still a significant quarter, but we can see seasonality coming down gradually. With this, we will open the floor for the question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Nitin Arora from Axis Mutual Fund. Please go ahead.
Hi, sir. Good afternoon. Thank you for taking my question. Sir, first question is on the order inflow, which you have received post 30th June, because it looks like you have won 211 crore worth more order. Can you help us understand where these orders have come from, number one, and also where you're writing in your presentation that you are in a negotiation stage with of 300 crore worth order more. It will be helpful if you can help us understand what are the programs where these orders are coming from.
Okay. See this, there are 2 large orders which we have finalized being L1. India for the first time is developing a space surveillance radar. This is for deep space surveillance for our defense requirements. And for the first time, DRDO has contracted this as a complete radar to be developed, not just the electronic piece parts, which they normally do. And they do the integration, it is an integration radar. So we were fortunate that we are lowest quote in both the contracts. So one contract was signed on Monday, which is about 189 crores. The other contract is going to get signed where negotiations are completed. It's about 173 crores, which is what we mentioned that we 300 crores. We have completed negotiations awaiting order. We received the LOI for this. The order is expected this week or next week. So there are 2 large orders on a complete radar. The important thing on this orders is that this is only a scaled down prototype of the actual radar, which has to go to deep space surveillance. The final radar values is expected to be a few thousand crores each. So this is a start. Once we build the systems, hopefully we will do the large systems as required by Indian Defence. So it's a very important milestone for us to get both the radar and the entire system, including building construction, everything we will be doing ourselves. This is a very, very important milestone for us, these 2 radars. And this is part of the 600 crore
question is from the line of Sandeep Tulsian from JM Financial. Please go ahead.
Yeah, good afternoon, sir. So my first question is regarding the margins. I think you had guided for the 65 to 70% gross margins that the company should clock going forward, and one should not look at last year margins as a barometer. And also, you made a comment in previous calls that you would high margins in certain contracts will give you leeway to bid for new contracts, large value contracts at some aggressive prices. So how should we look at the gross margin profile going forward? Do you think on a blended basis we will still be in that 65 to 70% gross margin range, or with these large value integration orders, this gross margin range would come down a notch lower? If you could just give some more color on that.
As we said last year, last call, I think this year, whatever projections we're doing, we aim at a 60% gross margin. This year, at enhanced sales, whatever guidance we've given, we continue to do that. I've not commented on next year yet. I'm checking the orders which is coming now. Some of them are executable this year, but large part of the contracts we're talking, this 300-400 crores, will get, or 600-500 crores will get executed next year. So that is the timeline for the contracts. So this will not affect this year's performance in terms of gross margin for the time being. To answer the other question, system integration contracts, yes, what happens is, while we retain our, in the electronic design which we do, equipment design we do, we retain, a healthy gross margin, above 60% gross margin normally we keep it because a lot of design effort goes and IP goes into this. What happens when you integrate big systems, when you buy generators, when you make buildings, when you put structures, obviously we can't add 60% to that and we expect to be L1. That's not going to be practical. So we need to look at the program point of view and take a call, not necessarily only on gross margin, what is competitive numbers. But going ahead, what happens, let's take these two contracts and we scale this to 20 times. A radar, this is only a scaled down radar. The next radar is only 15 to 20 times bigger, each radar. So if you do that, then what really scales is the electronics. And then the building and all other things, is separate construction really happens to it. So on that level, we have protected our systems, and so that, tomorrow when scale happens, we have reasonable margins. Obviously, with size of business, margins may be different. But what we are more looking at is revenue growth and bottom line growth. Not particular margin on each vendor, each part is not. The particular margin necessary on equipment which you do, because a lot of IP goes into development. Are we competitive in an international scale with what we're quoting is what we're seeing. Because we reinvest on the development and continue to build the product as a product over the next 7 to 10 years time. So we need the margins to drive the business. But on system integration contracts like this, obviously we have to be competitive. But what I can say is, as the revenue grows, our bottom line also will grow. We are not taking revenue at the cost of the bottom line.
Right. So that is fairly understood. What I was trying to understand is these two orders which you have received, broadly what would be the electronics portion, or this is primarily electronics, and on the bought out, typically what are the margins? Are they low single digits? Are they in early double digits? If you could just give us some sense, that would help us assess the gross margins for these orders. Not when they scale up, but in the current
an estimate for next year, not contract-wise, because these are sensitive information, and we don't want this distributed how I quote for which contracts to the competitors. I hope you understand.
Understood. No worries. Understood on that front. Second question was on the ratio that you typically share on the single vendor contracts versus the competitively won contracts. So for this year, how do you see that ratio? Typically, the 60 to 70% of our contracts were won on single vendor basis. If you could give some more color on FY23 order inflows, how that would look. And second part to that is also on the exports piece. We have been reading in news a lot of these LCA and BrahMos and other systems will be exported. So what is the order pipeline on the export front? Those are the two final questions.
Okay, see, most of the contracts we get are single vendor, which is what is predictable business for us. And that is what we plan for future, what order we are getting. So our pipeline, what we project, and the business plan we make internally is all based on largely single vendor contracts, because when you go for a competitive bid, we do not know whether it's a 0-1 situation. So we don't really predict on that. But good thing is today we also have one competitive bids, and that is a sizable bids that have been won by us in a few case situations, which is good. So that is also adding to our overall thing. Because of the large contract we have got, our single vendor contracts we're talking about 50 to 60% will be single vendor contracts, and the rest is competitive bid. But on my projections for this year in terms of 400 crores, 500 crores, I said for FY22-23 order intake or January to FY23 end, I had made some projections last year. That does not include this 400, 500 crores of competitive bids. So what really is going to happen is, I think we will exceed our order intake projections given last call or last year. So that's what's happening. But to answer your questions, it's about 55 to 60% or 50 to 60% single vendor contracts. And exports, I think we should do about 10% exports this year. And we are discussion with we got an order for about £500,000 order last month. We are expecting some more contracts to happen. Some more countries are talking to us in terms of development requirements. So hopefully with time it will grow. But today it's about 10% of our revenue.
Okay. Thank you.
And third part is the export on BrahMos and things like that. We've already finalized a contract with them. The order is expected about 60 crores, which is to be coming. I'm giving you wholesome numbers, not exact numbers. But this is for fire control system which we have designed. But BrahMos will stay starting back in 2002. So the orders keeps coming. There are more requirements from naval base of India that also is coming. But it is not an export for us. We deliver
to BrahMos only. BrahMos in turn will deliver it as a full system, export it as a full system. For us, it is only a domestic sale.
And I don't think there's any export order.
Okay. And just if you don't mind, could you disclose these two large orders which you won under competition? Who were the other bidders, and what could have been the price differential between L1, yourself, and the others? If you could give some color.
I don't know. First is I don't have full data. I know the competitors, but I don't have full data what is the L2 price because they didn't disclose the price. While our price was disclosed to competitors, because they had to negotiate with us, they did not disclose. So I have a guesstimate, but not the exact number. Is that relevant here? If you can always, I can talk to you one-on-one and give you that data.
All right. All right, sir. Thank you so much for taking the question.
Thank you, Sanjay.
Thank you.
Maybe I can take Sanjay. I should also tell you the major competitors are L&T, Astra, Bharat Electronics, Tata. These are the kind of companies who quoted there.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Akshay Kothari from Envision Capital. Please go ahead.
So congratulations on a very good order book. So I wanted to understand on the 211 crores order inflow which we have received post 30th June, would the orders be mostly on the development side?
No, whatever we received on first quarter, this radar is a development contract. But that is after first quarter only received. First quarter received is about 45 odd crores, mostly maintain the guidance as there is.
Okay. And in the investor presentation,
orders are all deliverable only after 18 to 24 months. So that way it is, I mean, this year it is going to be almost same, 25-30% is sustainable. Going forward, we may revise the guidance in case we think it appropriate.
okay. And so on the in the investor presentation, you have mentioned that 300 crores of further orders are expected in FY23 in the 30th June investor presentation. So post that we have received 211 crores. So we would be expecting another 100 crores that way.
No, we should expect another. See, I told you, these kind of tender bids, we don't really cannot consider for the projection earlier days. So these have come now. So I think we will exceed guidance on the order intake for FY23 will go up.
Yeah, it will go up by further 300 crore is what we have made it in the presentation.
Okay, got that. That's very good. And my last question would be on the innovation. So you did mention about radar. So what I would like to know is on the newer product side, basically on the innovation part, which are the new products which are in the pipeline, and where are we planning to go with that? If you could give a sense of that.
We are trying to do a whole range in radars. On airborne radars, we started design of an airborne radar. We already delivered one to DRDO, which is flight tested in Dornier. There's a Dornier upgrade program for Navy and Coast Guard is happening. So towards that, we already started development of an airborne radar, which has got a good likelihood of requirements in India. So then we are also doing some work on the radios. We have delivered the first few pieces for fighter aircraft software-defined radio to DRDO, where they are putting the waveforms, and then it's expected to be flight tested in HCF at the start, and also other platforms are going ahead. This is uniquely different because we are now importing from the file, and where we meet all the specifications in terms of hardware. We also have local encryption, Indian encryption to be added. That also we have made provisions here, meets and exceeds all the specifications. We've already qualified the system for fighter aircraft use. So based on the flight tests done by DRDO and acceptance, this can also go through other platforms. A variant of that also we received an order for a ground application on vehicle-mounted applications. That we received the order about a month back. We could execute it in the next 3 to 4 months' time. So variants of that we are trying to build. We're also doing a variant of that for radio relay for a surveillance UAV application. I have been saying that, we have not only look at MOD, but we also have to do, in India has to be self-reliant and build more in India. We need to build Indian ecosystem. Towards that, the first part, we talk to a platform vendor, and we're doing parts of the equipment, all the aircraft equipment in India. We are planning to do far more aggressively those kind of equipment build. So which goes into their platform, and if they sell that platform, we themselves start getting additional numbers. We already started doing that. This is the second area. The third area is also we're working a lot on EW. We delivered last 1 year, we've delivered a number of newer generation EW products, first from HF up to 40 gigahertz. An enormous range of products, all are in very small footprint form factors, which can get as a building block, which can go to air, water, underwater, ground, all of them it can go to all platforms. We expect that variants of that can get used in various applications, including MOD tenders. We are also looking at actively developing additional capabilities for micro and mini satellites, small satellite, including payload. That is another work we're doing where the entire system can get done. We're also working on some data link and waveforms for data link for line of sight applications. So we do a host of stuff on product development from an Indian context, but it will be all positioned as an international product. To see that equipments are designed in India rather than import technology and build manufacturing equipment here. The idea is to differentiate ourselves and be the equipment vendor. This is why we have 480 engineers working with us. We are scaling the engineering capability. We are recruiting more people. And we've now really nearly 900 people. I think in the next few months we'll cross 1,000. We're doing a lot of people. Second, we also created infrastructure. We are creating additional test infrastructure equipment test infrastructure and all of that. This is all keeping in line with what we have as a future vision to build state-of-the-art, internationally qualified kind of systems from India, which is export capable. So we're doing a host of stuff on that, Akshay.
Okay. Yeah, that's it from my side, and all the best. Thank you.
Thank you, Akshay.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Renu Baid from IIFL Securities. Please go ahead.
Yeah, hi sir, good evening. I just have one or two questions, largely on the order inflow side. While you did mention of those new 200 crores of orders that you've got in 2Q, can you share some update on the large programs for which you were expecting both Him Shakti as well as the other project, Arudra?
Yeah. See, what has happened is last year when we were on the call, I had said this year order intake will be these kind of orders, Him Shakti, Arudra, etc. But there has been some delays. We thought the order would be signed last year by Bharat Electronics, and back to back we should get some contracts. But that got postponed. But what I hear from market is that is any time about to be signed. We don't know what the any time is. Your guess is as good as mine. But what we hear is it is going to get done. So back to back, I think you are on a call with BEL. They should give you more clear indications of when it's going to get signed. Hopefully after they sign, we should start talking to them on the subsystems for Him Shakti. But I expect this to happen this calendar year. Second is on the Arudra again. Again, I think they are in discussion or negotiations. The tender is already submitted many months back. So again, BEL is in negotiations. Again, what we hear is that that should get finalized, and back-to-back orders should also flow this year. These two orders. The third one is the LLTR, which is the Ashwini. I think Air Force is planning to move the paper for AON and DAC. So there is a lot of correspondence activity happening. So this also should happen this year, at least take off this year, maybe contract happening next year. These are all in the cards. There are other programs on which we did not talk about, was the Netra 2, which is a contract which has come for early warning radar. Aircrafts are going to get already bought by DRDO, Airbus A321, and they are upgrading the aircrafts to radars and electronic warfare and other things. So we also should be playing a role in that. The size of role is, as of now, not clear, but we will play a role. So those are contracts which will happen. Development contracts should happen this year. There is again another program for the Dornier upgrade. Again, some contracts may come to that in that order also. Again, size of contract, this is not a time to talk about it. As and when it happens, we will update you on the kind of contracts. But we are working towards all of them. And it seems that there are quite a lot of activity happening. There are new radars which are being planned, some activities happening. You already quoted and become L1 in one Air Force program upgrade, which is Aerostat, EW upgrade of Aerostat. That again we expect a contract anytime now. And that's an exciting contract because it has comment and element, none of them, and a full system upgrade with their version capability, all of them will do. That gives a lot of confidence that what is originally Correct.
Okay. So which is interesting. And lastly, if you look at the broad issues of supply chain, semiconductors, how is the situation now versus last quarter? Have you seen material improvement? Are you seeing acceleration in project execution, including projects which were delayed, or you think some of these problems may continue to persist for some time? So any comments on this?
Yeah, see, there is a general improvement, but certain types of components from some manufacturers are still slated 52 weeks and 60 weeks. What we are doing is placing orders and expecting improvement in the delivery schedules. But while placing orders, they are not willing to commit any earlier time frame. There are a few companies who are doing this. So we are looking at alternates to, in case it doesn't come, can we do a redesign of those parts, use some other parts. So those kind of mitigation practices are following. But we don't want to do that all the time, so we're placing orders ahead, hoping that the component will come. But yes, generally the situation is improved, but still there are specifics and issues, and every single component is a problem. If one component doesn't come, we can't deliver the product. So from that perspective, we are very cautious and probably taking additional decisions to stock inventory.
Right. And lastly, any developments to share on the space side? Or do you think it's still a little too early and we may have something a little later during the year rather than now?
Yeah, we're working on some, but it's not come to any situation where we can announce anything.
Got it. No problem, sir. Good performance. Thank you and all the best.
Thank you, Renu.
Thank you.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Gagan Thareja from ASK Investment Managers. Please go ahead.
Yeah, am I audible?
Sir, you are not audible. Please increase the volume of your device.
Yeah, am I audible now?
Yes.
Good afternoon. Sir, first question is around the order book. I am slightly confused. Orders on hand is 663 crores and negotiated orders with LOI received is 174. Negotiated and yet to receive LOI is 168. So that is theoretically another, 330, 340 crores possible. Are you saying there's another 300 crores over and above that, or are you saying this is a 300 crores additionally over 663 crores, plus whatever you could get from him, Shakti, Arudra, and Ashwini?
Yeah, this is what Renu asked. What I'm saying is it's already negotiated contracts. The contracts are expected probably this month, next month. Maybe this month we should get all the contracts because already declared L1 and negotiation is completed. So with these contracts happening, I was saying that we will cross 1,000 crore order book, which is what has been given in the press release.
Okay.
But earlier, we had given guidance last year that we will do some 400 to 500 crores of order intake during the course of FY23. So in that, we're not catered for tender orders. What we've been given guidance was based on some of the large orders which has are coming based on single vendor contracts. So there's a predictability to it. Only the timelines can get shifted. That's what we gave. But these are tender orders we got, which is a good thing. So I retain that. We still maintain that some of the new things will happen in the last few months where we believe the contracts will happen. So I put additional another 300 crores is possible during the course of FY23 is what we're saying now. And if Pim Shakti and some large contracts happen, that will be a bonus.
Right. And also the 173 and 168 crore orders, is this the surveillance radar order and the low frequency bandwidth order? If I got it correctly, or am I mistaken?
Yeah, these are two particular radars.
Yeah.
One is an S-band, the other one is UHF. What I call low frequency is ultra high frequency, but that is how the term is because we're doing 10 gigahertz and beyond now. So there are two separate orders. These are scaled down radars, probably 15 times, 20 times scaled down. To validate the radar performance, everything else as a building block design is common, So scale the radar, increase the number of building blocks, and you get the. So let's say 1 2-story building I do, it can be a 20-story building tomorrow, where the radar will get housed on the side wall. So the size of order is very large. This is going to deep space and tracking deep space requirements. Because I can't talk about specific applications, I'm not even authorized to understand this. I'm working with the DRDO on this. But the very fact that we're building the full radar for them in the next 18-20 months is what we're supposed to deliver. So those are 2 radars, which is very exciting for us because these are future technology and the size of business can be very large tomorrow once we deliver the products. And this is an integrated radar, so the repeat requirements will, we believe, hopefully will come to us.
So the scaled down versions will be tested and validated, and then the final full scale radars will be ordered. If you could give us the time.
It is one or many. India is a large country, we have large space to manage our space assets. So we don't have an exact plan how many will happen, but it will be sizable.
Right. So what will be the timeline for testing and validating the scaled down versions?
Our delivery is about 18-20 months,
okay.
And after that they'll test it. But once the basic systems are functioning, they're saying that we will go ahead and start planning for the big radar because delivering the big radar also will take time because it's a very large, very, very, very large system. It's probably the largest radar India will design. Both the radars, the individually largest radar. So we're talking thousands of kilometers to be tracked and surveyed. It's a large radar. So they may take, once the base systems are coming in picture, it depends on what government does and the MOD is thinking. They see something happening, maybe they'll initiate early or subsequent wait or do. I'm not really at liberty to say because I have no complete data on this. But it will happen. We have delivery is scheduled at 18 months to 24 months.
Okay. And the design of these radars is DRDO or is it your own design?
The architecture design is DRDO. Okay. We do all the subsystem design, electronic piece part, PCB, all of them we design. Of course, anything you design will be supervised and managed by DRDO. There will be joint development. But they may be the final design authority. But we are doing all the part design, like we have been doing all along. We design all the terminals, phase arrays, the antennas, the signal processor, all the data transfer, everything, the mechanical structures, the movement mechanisms, everything we will design, and of course validated by the DRDO.
Right, and you indicated execution is 18 to 20 months for these orders, and what would be the execution period for the 663 crores orders on hand?
All are in the next 2 years, excepting one order which can go to the 3rd year, which is the cockpit display, which is a 3-year order. But we have an option to do early delivery also. So we need to decide what we want to do, whether to keep it 3rd year or we can do it in the 2nd year.
So the entire potential 1,000 crore order book has an execution time frame of 20 to 24 months.
Yes.
Right. Okay. And when you say you are moving into system integration orders, is it first of all possible to understand of this 1,000 crores, how much, ballpark, what proportion is system integration and what is, simply pure product subsystems and so on?
Largely, except for these 2 radars, which is gas building, construction, all of those things, and power systems. A lot of mechanical stuff and all that in that, but the design is fully ours in all of them. So we call it as a system, our own system. But here there are bought-outs in those things, which is not there in whatever we are doing. So largely, except for 3,400 crores, 600 crores will be our own systems.
Right. In
the existing 1,000 crores.
And since BEL is a large integrator of electronic systems for DRDO and MOD and so on, are there gross margins representative of what the system integration margins can look like?
See, these are 2 flavors, Bharat Electronics gets most of the contracts on nomination basis.
Okay.
So I really cannot say how they are pricing the product because it is between government departments, orders are done. Whereas when we quote, it is on a competitive basis. So we need to look at that and price it accordingly. So I won't be able to directly say their bottom line, those system integrators, the bottom line is 20%. Will I do 20% or more than that or higher than that? That's not a statement I can make because I do not know how they make that margins, really, on what contracts, what is being done. We are going to look at product-specific, program-specific requirements, take our call on what is competitive and what is acceptable to us and make an offer. So it's very difficult. And second is, without competition, you do, things may be very different. Right? So we can't really compare like that.
Right. And on developmental, get 30% advances if I got it correctly. On production contracts, what is the advances? And on integration orders, what's the advances like?
We know development, you can't say all are getting 30% because an open tender comes. They say no advance, only for, for a guaranteed paper you give a 3%, and after delivery only you get money. That also is there. But in these contracts which we have, they have a 30% advance. And some, on the production or repeat contracts in HAL, we have 15 or 20% advance. MOD tenders, as per DAP 2020, they are allowed to give 15% advance to 20% advance on the contract value. And stage payment happens on part deliverables. If 1 year or every 3 months you deliver something, on that there is a percentage paid. Either the value of the unit is paid, less advance, or they have a defined stage payment for delivery. So both are possible. This is MOD tenders. So some contracts also come without advance. But largely here now we've got contracts in advance.
Right. So finally, net working capital on integrated, system contracts, would it be similar to what you have so far had on your product and product contracts, or is it going to be a little different or very different from that?
Very interesting question. We're going to do the system now. We will try to the sub-vendors to do back-to-back, which they may not agree. Okay, so we need to negotiate better terms for us. Otherwise, what happens is talking goes a bit more. But what has happened is DRDO also understands the large order, and they're given a stage payment against bank guarantee. So again, non-fund limit, other than the advance, we also have another stage payment where we can show procurement happening and then get some money so the cash flows are slightly eased out. So that is possible. But from net working capital days, what we say, there may be a bump because of large contracts. Something will happen. But what we will do in this situation is try to get the bought-outs at the final stage, not during development stage the first 1 year. Get them right in time, just in time, accept it, take it directly to field. So we will not try to bring it to a factory and keep it here. Unlike raw materials which we keep here and manufacture and test and validate, those things will be done at subcontractor place or vendor's place. Where customers go and validate it, they'll ship directly to the site. So that is how we want to plan our working capital. Hopefully we'll plan it well, see that we don't have issues.
Right. Sir, if I'm allowed just one more, or if not, I'll get back in the queue. If you're okay, I'll ask one more question.
I have no problem, but the organizer has to decide. I have no idea who's waiting.
Okay. So you make seekers for BrahMos, missile seekers, simply because our missile programs are now fairly comprehensive, QRSAM, MRSAM, and very short-range air defense systems and man-portable ATGMs and so on and so forth. Do you have any plan to expand your footprint on the seekers side?
See, to be honest, we have all the competency to build whatever you're saying. But presently, these are all transfer technology imported coming into the country. If we get an opportunity to quote against such requirements, 100% we will do it. From small weapons to larger seekers, weapons, we have a competency model which can build it. But what happens is that it comes as a weapon when you MRSAM and all that we're talking about, QRSAM. So you're buying a weapon, you buy parts of it, transfer technology comes to manufacturing here, which goes to PSUs. That is what is happening. So whereas when this facility happens, when we can design products here, then definitely we will be standing in line or in the front of the line to see that we give the opportunity. But so it's not a question of competency, it's a question of getting the right opportunity to build it. It's not that, we'd like to expand capability to build it. We have the capability, but we need a contract to build because we can't build general specifications for an APGM or anything for that matter. How will I put it part of the weapon? That is a tricky part. And unless you're allowed to put the weapon and do testing, you can't do this. So there's no point in designing things in these kind of situations without the weapon manufacturer or the buyer participating in that program, giving the specifications, and then build and validate. So that's the only way we can do it. That is why I'm saying all along we need an Indian ecosystem. We say we'll develop here. One thing government is doing is saying 50% Indian content in every contract is a start. There's a make one, which is saying is a second start, which this we can do. And then the technology development on some IDEX, but IDEX are all small parts, small systems, not for these kind of complex systems where the weapon has to also get developed. So as and when the ecosystem grows, I think people like us will play a very large role in building the competencies and the products so that it can be truly made in India kind of system.
And basis the work that you've done, for developmental work for DRDO, which is now sort of coming to fruition and will scale up. What sort of potential pipeline in radars and electronic warfare systems and avionic display systems and so on do you foresee in the next 2-3 years? While you give a figure in your presentation, you've already received a sizable part of that figure right away in this year itself. So therefore, I'm simply trying to understand, what's the potential pipeline, what are the areas, which will be critical, and how large could the opportunity be over the next 3-4 years?
Yeah, we showed 2 to 3 billion rupees. We said 2,000 crores plus. That remains as a pipeline because no part of that pipeline has been realized as of now. These are all different contracts. Okay. Nothing to do with the pipeline projected. And the pipeline will go up because we are developing more products now. And if this is qualified and it comes for other aircraft programs, that also can get added. So the pipeline remains intact. We thought some of them will start this year, but we have said 2 to 3 years only. Earlier also we said 2 to 3 years because decision-making time is going to be long term. Though there have been, we have qualified the systems, tendering will, for the repeat requirement has to happen, funding has to happen, and then after that back-to-back contracts has to happen. So that is why we have said. And some of the programs like RWR or Levant and airborne systems takes time because once flight testing happens, funding has to happen for upgrades, and then only this will happen. But there's enormous potential because there are too many aircrafts, too many types of aircrafts, and all of them the electronics is obsolete or going obsolete. So the airframe flies for 40 years. Electronics does not fly for so many years. So there's an urgent need to upgrade it, maintain them as combat worthy. So requirements are large. It's a question of how do we address the requirement, meet customer expectations, and after that they have to ensure that money and time frame for upgradation is done, and we are there at that time. So these are the factors. So that's why we didn't put a timeline. It's 3-4 years. This pipeline is there, and we still expect the pipeline to be there, and it should grow.
Right. And finally, sir, from a manpower perspective, since now these are all sort of sunrise sectors, and there's obviously high demand for experienced and talented engineers in this area, is it relatively difficult for you to get the requisite manpower with the requisite work experience, or is it increasingly getting more difficult, or you feel that that's not an issue at all?
We have to grade the manpower. There is development manpower, project management manpower, HR, production, and then management, if you grade. In the general purpose area like management, HR, these are, we will get lateral hires to do this and build up competency, and the top layers can get built, the top and middle man can build. Similarly, project management can be lateral recruits, and once 1 or 2 years of training with us, with our way of working, they also fit in, which is what our experience has been hitherto. So on the lower end, if you look at development skills and things like that, production and development, what we are doing is to take fresh graduates and train them. We've been doing this for 15, 20 years now. Only the scale of people, number of people we're taking now is enhanced. We have in-house training, in-house our own champions of training, our own engineers training. We have outside people coming and training them. So training is a fundamental part of our recruitment process. Matter of fact, we even take 9 months ahead of job, take them as trainee engineers when they're in 4th year, and see that we do the projects here, we give them salaries and take them in. So they continue to work as we go along. We found good success in that. So on that area of technology which you're talking about, we don't normally hire laterals because, like you said, it's very difficult to get the kind of people whom we want. And we've not hired from competition also. We've homegrown in-house training is what we resorted to till date. Going ahead, it may change, but as of now, this is the plan. We're not really looking at lateral hires for those kind of positions. But we're confident we need to beef up our HR process, our training procedures, recruitment. Yes, we do have problems of hiring. There is an issue on that. There is a demand, there is a gap. We are trying to address the gap as we go along. And with scaling happening, we're looking at what kind of staff positions are getting open, how do we plan for it. It's an enormous work. It's actually capacity building work. We are seized of that particular problem, and we are finding solutions to how to do this and how to multiplex, how to reduce the largeness of the work into smaller pieces so youngsters can do. So
slice the work,
yeah,
basically, to see that they come up and do the technical.
So we are addressing the problem in various levels, but I think we will build the competency because they have all the 900 people we have, most of them 800 plus have been built internally by us.
They're all homegrown. More or less.
And our average age is 23, 24 for all the 900 we see. Obviously, we're senior people, but so we have a young crowd and willing to learn. And there's a lot of ownership in our company. More than 250 people are shareholders in Data Patterns. So there's a lot of ownership.
Right.
And we want to build a large organization together.
Yeah. And your thoughts on succession planning?
Yeah, we already recruited last EGM, recruited Vijay, who is the COO. He's about 20 years with Data Patterns. He's young. He's brought in as a director on the board. Similarly, we're looking at each part of each role and how do we want to build the role, how do we build up. So this is one of the agenda points the board has given us, and we're working on how do we, who are the guys who will take our positions, how do we scale. You are asking the right question because this is the discussion in the board meeting even yesterday.
We have started actively. We've already identified a few positions, and we are then going to take it forward.
The other thing is, since homegrown business, it's a very closely knit organization. So the top management is all together, all decision makings together. There is no hierarchy in that sense. So every decision is shared and owned, and all non-problems are common and understood. So we should be able to build this, what we think.
Thanks, and wish you all the best, sir. Thank you.
Thank you.
Thank you very much.
Thank you. The next question is from the line of Mudit Kabra from Elara Capital. Please go ahead.
Hi, sir. Congratulations on great numbers. My first question is, with this EBITDA margin of 31% in Q1, what would be your outlook for the whole year, for EBITDA margins?
Can you come back again? Your voice is a bit muffled.
Hello, is this better?
Yeah.
Yeah. Sir, considering 31% EBITDA margin in Q1, what is your outlook for the whole year?
See, we have told you on the year we will do 40% EBITDA. We will continue to keep that guidance because see what happens. EBITDA is a function of revenue and gross margin and overhead expenses. See, our revenue is not evenly distributed all quarters. So the last quarter becomes a high revenue but the overhead remains same in all quarters. So EBITDA then quarter to quarter is low in the first 3 quarters, and fourth quarter it jumps up. And overall EBITDA, I think around 40% guidance we give, we do that. Matter of fact, what is interesting is from year-on-year basis, first quarter 21-22 to this quarter, our EBITDA has gone up. Okay, but though the overheads have gone up, expenses have gone up, and even the gross margins have come down because of some few contracts, our EBITDA has actually gone up. So we will continue to keep the guidance of 40% EBITDA.
Okay. And another question is as we are filling more of our order book from radar contracts, and recently you've disclosed that this LOI order is regarding space surveillance radars, which is a big size. So can we expect higher gross margins, higher margins in the coming year when these orders will be executed? Like higher than 65-60% what you've guided for?
Say we are already a very high gross margin company. If we have to increase gross margin on large contracts in competition with L&T, Tata, BEL and all that, we think it's feasible. I think our gross margin higher, it comes from basically because we have done internal design and the IP is getting captured there. But if you do system integration, the IP is not there. And it's a competitive model across. So obviously the gross margin there is going to be lower because when you buy and integrate, you cannot have that kind of margin. And what we do in design, since design is done over many years and this is all written off, you are seeing it today having its gross margin higher. So obviously it will not be like that. But what I would say is the revenue will go up, the bottom line also will go up on a year-on-year basis. That's what we're doing. And today we have to scale to a large corporate. I need to build the end equipment. We can't be a part supplier and then expect to do a few thousand crores of business year on year. If you want to do that, you need to build systems like this. So our aim is to grow. So our aim is to do, but then do in India. Keep the margin profile as intact as possible in a competitive scenario. By doing more in India, where others import and do, we try and do more in India, and that is where the gross margin really comes up. But when that's not there, then we need to compete on the same kind of floor. Then obviously we'll have a similar gross margin. But then it's never the same because a whole lot of electronic systems gets added because that's a core competency and that's the programs we are selling in. So there will be some difference where we have flexibility in terms of pricing.
Got it. Thank you, sir.
Thank you.
Thank you. Ladies and gentlemen, this was the last question. I would now like to hand the conference over to the management for closing comments.
Thank you all for taking this hour plus to ask questions and interest shown in Data Patterns. Again, I reiterate that we are in line with whatever projections. Matter of fact, our order intake will grow. We are enthused because more programs are getting opened up to industry and large opportunities are getting created for people like us. We will continue to strive to build high technology, high IP products in India as against importing and build the entire equipment here. That is how we'd like to scale. And some opportunities have turned fruitful. We hope to deliver all this in time, see that we can build a strong foundation for future. So thank you very much. Any questions, you can always write to Go India further questions and we will be very glad to answer them. Thank you very much.
Thank you.
Thank you.
Thank you. Ladies and gentlemen, on behalf of Go India Advisors, that concludes this conference call. Thank you for joining us, and you may now disconnect.